Lakshmi Iyer is with us, CEO of Investment and Strategy at Kotak Alternate Asset Managers. We want to talk about the rupee. Lakshmi, good afternoon. Good to have you. These are very large moves that one is not used to, essentially, right? I mean, the dollar-rupee pair has been so remarkably stable and predictable and boring that this is exactly the opposite of those three things. So just your thoughts of what's going on and where are we headed near term?
No, absolutely. These are not the best times and obviously not a great start to the year, given the fact that, if you look at the foreign portfolio outflows, the year has begun where the net sales in equities and fixed income both are negative to over $3.5 billion negative. And this comes at a time not just dollar is gaining strength versus every other currency, including rupee, but also U.S. Treasury yields rising. So I think it's a little bit of a bummer situation to our mind, which can probably extend for a little bit more. So I don't think, are we yet stabilized in terms of the market conditions? I think the answer to that is clearly not.
Lakshmi, hi, afternoon. Are we seeing limited intervention in the currency market? Any evidence of that? And secondly, does the rupee price out any potential rate cut in the upcoming policy meet?
So honestly, if you ask me, if you on the rate cut part, if I tell you right now, seems to be, it is needless to say, it has to be on the back burner for now, for two key reasons. One is the US is not going to be in a pressure to ease interest rates anytime soon, given the jobs data, etc. Second is, if you look at the rupees, if you look at it as a basket of all other currencies, it's clearly indicating reasonable overvaluation. And you wouldn't want to, probably ease interest rates at the current juncture and cascade, or kind of exaggerate the pain on the currency right now. So I think from all those perspectives, I think it's fair to assume a delayed rate cut cycle in 2025.
Lakshmi, I'm just trying to be, hi afternoon, this is Surabhi here. I'm just trying to be an optimist in this rather negative, somber environment. All this has happened. Markets are so rattled even before the real tariff announcements begin by Mr. Donald Trump, right? The dollar index has rallied 6-7% in just 3 months. I mean, in October, we were at 101. Now we're almost touching 110. So could the silver lining be indeed that this whole thing is now just about to peak out? And that when the actual announcements come, even if it is 10% tariff or 30, 20, whatever the announcement is, the market remains, a little unfazed because, well, it's already gone through the pain. Or no, I'm being too optimistic.
No, Surabhi, I think more than optimism or pessimism, I think the time right now is to, display some pragmatism. I'll tell you why. You look at crude oil prices, one moment we can say too much of Trump's mania getting priced in, but look at crude oil prices. I mean, they clearly will put further pressure on our country's trade deficit. So today, if the dollar is behaving like the Mufasa of the market, I think it is with every reason. So I think one needs to probably, lie low in the very near term. And these are all near-term constraints that I'm talking about. The broader narrative of the macro does not really change. But I think near term, given the fact that if you look at the last 12 months, our currency depreciated the least or among the least, some payback or Guru Dakshina or currency Dakshina, I would say, is inevitable, frankly.
Lakshmi, last, you look at 5 years, 10 years, every year, there's about a 3.2% average depreciation in the rupee, right? Last year also it was something similar. It's just that we've started this year and it's a big move coming very, very quickly, right? That's it. Now, if all what we're saying, I mean, oil remains high and maybe another rate hike in the US, as some are calling it, then maybe the pressure sustains. But one could also take the view that maybe, once Trump comes in, his basic agenda is tariffs, of course, but also lower energy prices. You think, oil is a big one for India as we're a large importer. And, the view also is that ultimately they're going to be pragmatic. Every day, Mr. Trump, at least when he was president from 2017, he used to wake up, look at the Dow and marvel at how high the Dow was, right? He doesn't like markets down. And he's certainly not aiming to crash markets. I mean, do you think this is in a way sort of, sell the rumor, not buy the fact, but something similar to what Surabhi said? Maybe we peak out around that time. Or you think it's unlikely?
Yeah. No, I would say that, if bad news is traveling, it has to travel the elevator, and good news can take the stairs. So it's good that some bit of this, bad news is actually getting priced in sooner than later till we start focusing on the slightly better stuff. We are not rooting for a U.S. rate hike in the near future. At least that's the view that we still maintain. But yes, gratification for rate cuts, which the markets have been waiting for a fairly long time, starting this quarter, I think that clearly needs to be behind the back burners. So yes,
Lakshmi,
bulk of the negative news is getting priced in right now, but it's more of a wait and watch.
Lakshmi, we all used to talk about the Fed put ultimately during the global financial crisis. That there's a Fed put, and when will it come to play? I'm just wondering, there's a Donald Trump put somewhere at some point in time, and the markets can ultimately hold on to that, final hope for some sort of deliverance. But thank you so much for joining in. We're in interesting times, and we look forward to more conversations as we go forward as well. So that's the global backdrop, and we're sort of mere spectators, both in the currency market and in the equity market right now with the kind of FPI selling that we have seen. So yeah, waiting and watching till the 20th.